Hello, everybody. Welcome to the Gold Rush. I am your co-host with Jason Perz here. What's going on?
Oh, not much. Just running around like crazy all day. From one meeting to another, from one live to another. I feel like I've just been live all day long, which has been cool. It's fun to talk about. But then last night I didn't sleep at all.
Yeah, tell the people about that. That's kind of funny.
Yeah,
Not
the
not funny
AC
for you, but
funny for everybody else. But the AC in the house went out because the power went out in the neighborhood for some reason. It was like I don't know what time it even was. I don't look at my phone or even a clock at night. So I'm sitting there. It's like I don't know, probably 1 in the morning or something. All of a sudden, I'm like sweating profusely, and I'm like, "What the hell's going on?" And I like go to look at my fan. I go to look at the AC, and everything's just off. And I'm like, "Oh." And then it was like my girl looked online. She was like, "Oh, it's supposed to come on in a couple hours." And then it just didn't until like 9 this morning. So I was just up. I just got up, just called a day, get up, keep going, sleep tonight, I guess.
you're a beast, Jason. You can sleep when you die.
Basically, you can
But
sleep
for
when you
now,
die.
get to work.
As I get older, the more I'm like, I really need my sleep, though. I'm really cranky.
Yeah. I'm still young enough. I don't need all that much sleep. I can just drink a bunch of coffee and rock and roll. But anyways, Jason, let's talk about the markets because there is a lot happening right now. Precious metals have been ripping, specifically platinum and palladium. Huge moves recently, but we're seeing a bit of a pullback today across the board pretty much. You have gold down 0.75%, platinum down 64 bips. You have palladium down, this is the biggest one, about 2.7% intraday here. So, yeah, I don't think these corrective waves will last long. I think any and all weakness will be bought. We have a lot of technical evidence that suggests this is the beginning of these trends, and we're nowhere near the end. So, yeah, I think yeah, I'm going to be looking to buy some dips in those futures, no doubt about it. Yeah, and you also have currencies making some interesting moves. We have some bond charts to talk about today. We have lots of charts. Commodities, we're seeing extreme volatility, compression in commodities at an index level. So that includes a lot of energy. I'm not sure if any of you have seen the crude oil chart recently, but it's been pretty much dead for years now. So if and when that gets started, it's going to be epic. And we have the Baltic Dry Index resolving a pretty textbook Kardashian bottom. So I'd like to touch on that today, and we have some more charts to get to. But first up, Jason, let's start with slide number 2. You brought this one along, showing the largest company in terms of market value in the S&P 500 each year since 1955. And as you can see, General Motors used to really dominate the index, but we all know that has changed in a big way. It's the S&P is primarily a technology fund nowadays. A lot of Microsoft, Nvidia, Apple. So, what was the story you were trying to tell with this chart?
So basically, the big idea here is understand markets change, and this is the thing, like, we all get it. Like, you got to think the people in General Motors all those years ago were like, man, I'm going to hold this stock forever. And they probably told their kids to hold the stock forever and so on. And then the market shifts. And then next thing you know, it's technology. And if you remember the 70s, like I don't either. I've just read a lot about it. I was born in the 80s. Sam, were you born in the 2000s?
Yes, I
Man,
was.
every time I feel so old when I talk to Sam. I mentioned Jerry Springer the other day, and Sam was like, I had to look that up, and I was like, oh man, I'm getting old. Um,
Yeah, it doesn't
but if
really sound like I've missed out on Jerry Springer though. It sounds
you
like a
didn't
loser.
miss out on Jerry Springer, trust me, it was like watching a train wreck. But the documentary is very interesting. But if you look at the 70s, you saw this kind of similar to today, where we had the Mag 7. Back in the 70s, we had the Nifty 50 stocks. And these were big tech names, IBM, and they kind of dominated the index for a long time. until they started falling one by one. I mean, even IBM being the number one there, it still was falling in price at that time. Nothing was making money except for commodities in the 70s into basically 1982. So you kind of had this situation there where market shifted into commodities in the 70s all the way to 82. That started in 68 to 82 was the commodity boom. And then you get into the next period, which is the 90s. And, GE obviously was dominant around that time, but Microsoft ended up taking over, and the tech stocks made the most money during that period of time. So basically, I remember, and the reason why I talk about this stuff so much is I had a great great uncle, and he's actually the picture behind me, the old man behind me. So he was very interested in cycles and the way cycles work in markets. So I always heard about this stuff all the time and had to learn about it and study it, and just hear him talk about it. It was always fascinating, but it also helps me prepare for like markets change. And so 2000 happens, he's telling me these stories about, hey, I'm buying. And at the time, I really had no idea. I basically wanted to probably go and ride my bike somewhere. And he's telling me about microcap stocks and gold miners and commodities. And, it's going to be like the 70s again. All these things are going to start to move. And I'm like, that's cool. I'm going to go ride my bike. Like, thank you for, the knowledge or whatever. So, like, but all these years later, I think back to those lessons and those conversations that we had, and they're very priceless to me because it shows, okay, Microsoft 2000, what happened after that? Well, a lot of people don't know this, but not small caps, but micro cap stocks actually led the way. Kind of the meme stocks of that time really led the way back then, from 2000 to 2008. Then international really led the way back then. Gold miners really led the way back then. Oil stocks really led the way back then. And as you see here, ExxonMobil around, I think it was '06, ExxonMobil became the biggest stock in the S&P 500 at that time. And so Exxon's leading the way, basically, I think it was to 2011. And then we got into, and this is the other thing a lot of people don't know. The dot-com bubble burst. And if you look at a chart of Apple or the NASDAQ even as a whole, 2008, the NASDAQ does not get anywhere near those old highs from 2000. Apple's nowhere near those highs. Basically, technology was dead until I want to say like 2013. But coming out of that 2009 bottom is when you start to see those move again. And then we get to 2012, 2013, the commodities start to fall out of favor in 2011. Basically, we had oil stocks kept moving, I think, until 2014. And then Apple's really took over. And then, we got the first $1 trillion company, which was Apple, and that was 2018. Microsoft's also leading the way up there too. So you kind of see this over and over again. And it looks like Microsoft actually took back over one more time in that year. I think that was 2019 where Microsoft became the biggest company once again. And then went right back to Apple. Yes, I know that's changed recently, but this chart isn't updated as of recent. I think it ends in 2023. Does it say on here?
It looks like 2021 to me, but yeah, it definitely has changed. You have Nvidia at the top now, and
But
Nvidia.
last year it was still Apple. Was it last year? Yeah, last year I think it was either Apple or Microsoft last year, and then now it's Nvidia. And is it Nvidia and Microsoft are kind of going back and forth right now?
I think Nvidia pretty decisively has the control of that top dog, but yeah, I think that's going to continue. I think Nvidia is going to be the first $10 trillion stock.
Yes, I don't doubt it. And it's, part of the reason why I want to say this too is, as markets shift, something you also have to know is like when people say like, oh my gosh, it's $1 trillion, that's too big of a number. Because that's what happened in 2018. Apple was too big. It was going to fall. It was going to crash. Technology was done. And now what do you know the market cap of Apple today?
No, maybe 3.5 trillion.
I don't know it off the top of my head, but I'm sorry. Can somebody put it in the chat? Because I don't know off the top of my head either. But like it continues to go up. It multiplied like 1 trillion sounded insane, then two, now three, maybe four now. This continues to happen over and over again. So once again, the main idea here is things can go on a lot longer than you think. And then secondly, markets change over time and be open to that. And I think now what my whole point is, and being very long-winded about it, is that we're kind of headed into a more of a commodity cycle, yields moving higher, copper's moving, metals and miners are moving, and maybe oil starts to catch up soon.
Totally. You brought along this long-term chart of the 30-year US yield, which let me pull it up on my machine and get you an exact price, but it's about to close at a new multi-year high. on a monthly closing basis. So if it closes above, let's see, 5.02% on the TYX, that would be the highest monthly close since like 2007. Not
That's
a
what
lot of people are talking about that, Jason. People are still out here talking about how many times the Federal Reserve is going to cut interest rates. I mean, to me, that's such a joke. It's clear as day. Rates are going higher. Commodities are breaking out left and right. And the final domino to fall is energy. And I don't think it's far away. I think within the next 6 to 12 months, we'll see a significant move from energy. And I don't think it's going to be small, Jason. I think crude oil has a chance to hit $200, this commodity cycle. We've seen it at, I think the all-time high is around 140 in the crude oil, if I'm not mistaken, but
2008. Yeah, we were
I
just
think
over.
it's a lot easier for crude oil to hit $200 than people are pricing into the market.
I think so too. And I think, people get used to something that hasn't happened in a long time will not happen sometime soon. And really, you start to get hyper focused. And it's normal for human behavior. Normal human behavior is getting hyper focused on one thing and going, this is going to last forever. It's the reason why you see certain guys who are gold bugs, and they're gold bugs even if gold is going straight down. The tech guys are in technology no matter what. Yes, they've been really smart lately, but at some point that will go down and they will still be very bullish on technology. And then you got the macro guys, like Sam and I will trade whatever is in front of us. And you just have to be open to these things can shift and change. And so you guys have seen, if you've been on here for a while or you're one of our subscribers, you've seen my chart that I share all the time, which is the Fed rate and the 30-year yield. And, so many people point to the fact that, oh, the Fed's going to come in and cut rates and then rates are going to go down. It's like the Fed did cut rates last year. The 30-year kind of laughed it off and bottomed right there and started to move higher. So once again, it's a continue to be open to the fact that this is an uptrend. And if you looked at this chart and it was NVIDIA, and I've said this before, but I'll say it again for anybody that missed it. If this was NVIDIA, everybody would be drawing a pennant pattern or a flag pattern or an ascending triangle and going, this thing's going to go so much higher soon. It's going to break out and all these things. But because it's yields, they're like, oh, fundamentally, it means this. Well, fundamentally, the Fed can do whatever it wants to do. It controls the short end of the curve. The long end of the curve is really tied to inflation expectations, and so on. And if you think for a second that if Powell or whoever's next, or somebody gets fired, and then they take the Fed rate down to, let's say 3, let's say 0, whatever it is.
I hope they do, Jason. Imagine what commodities will do.
And if you think
Imagine.
that's going to happen, like what does inflation expectations do? What does copper do? What does oil do? It would just explode, like you said. Like it would just explode higher. That would be the end of that trade completely. Like it would be Powell's point proven. Hey, if I lower rates, I think it would be bad for the market at the moment. And then they lower rates, and then next thing you know, Powell would be completely right. And I think that's a completely the right way to look at it, which is if they were to lower the Fed rate, it would cost so much money to come into the system that next thing you know, and why I say money, so I'll explain this real fast, which is when you look at the Fed rate and you look at the spread between the 30-year and the Fed rate, and you go, okay, let's say the Fed rate's at 3.5 or something. I'm just giving you guys numbers, and the 30 years at 5. The banks are able to lend from the Fed rate or somewhere around the Fed rate. And then we lend from the long end for mortgages and so on. And so, we're getting above 5, they're getting around 3.5. And so this creates more liquidity in the system because they're able to borrow at a lower rate. So if you drop that even lower, they're going to be borrowing even heavier, buying a lot more. Money will be going out there like crazy. And next thing you know, housing, commodities, all these prices of the cost of living would go insane.
Did
And
you see this headline that Trump is considering removing capital gains tax on home sales? I think there's
I
some
did
pretty
see it.
significant caveats to that. But, as somebody who's looking to buy a house, um, I don't want that to happen. Housing prices are already too high. So,
Well, I mean,
but yeah, I think that would stoke a ton of inflation in the housing market. I guess is the bottom line. The market doesn't care what I want, or, you know,
for sure, but it's still it makes sense and it's pertinent to this conversation for the fact that there's a lot of people trying to go buy homes right now. I mean, whether you're talking about millennials my age or you're talking about kids your age, like there's a lot of people out there trying to buy homes, and not to mention people have been waiting because the price has been so high. It would cause another glut and another problem. So there's just like kind of an issue on issue on issue here, and it all leads to higher inflation. So my main thought here is Sam and I don't care about the higher inflation aspect for the fact of, people. Yes, we care about people, but when we're talking to you guys, we're trying to make sure you're positioned correctly to make money. And we're just saying, like, this is all pointing to higher yields, higher inflation, higher commodity prices. And the things we're long in the portfolios, we want you guys to continue to look at, stay long. Not advice for you guys in your own personal portfolios, but if you guys are long these things, I wouldn't bet against it at the moment. I wouldn't have bet against yields going higher, gold going higher, and like Sam said, I think oil's next.
Totally. And it's a good example of separating our biases from our market actions, Jason. Like I mentioned before that I'd liked lower yields and lower home prices so I could have a house. But, that's just not really the reality we're in. So I'm gonna trade reality, and the reality is yields are probably going higher, and there's a way for me to profit from that. So, I can sit here and cry about it, or I can make money, and I'm gonna make money. And,
Exactly.
right now, I think is a really interesting time to make money in commodities because look at this Bollinger Band squeeze setup in the CRB index. Boy, is this tight. And it's not just the CRB, which I believe has more energy exposure than the DBC. They're both very heavy in the energy, but it doesn't really matter how you slice it up. Commodities look really, really ready for a big move. This is this DBC with the very similar Bollinger Band squeeze setup. And we've been talking a lot about this commodities X gold index that we have. I think this gives the clearest picture of what's going on here. It doesn't have those outsized positions in energy like the CRB and the DBC do. And, Jason, I've studied a lot of charts. And this is about as textbook as a consolidation gets. You had this huge ripper off the 2020 lows. This index rallied 110% in 2 years. Again, this is commodities X gold. So this is all commodity futures equally weighted together in a basket. So it's things like cocoa and corn and live hogs, and you have lumber. You have all of those commodities in there. And this is what it looks like. This looks beautiful.
This is an amazing chart. You brought this up the other week, and it's just like when you see this type of consolidation and this type of low volatility regime that goes on for so long, and then you see a shift. It's kind of like think about it, engineers think about it a certain way, which is, when you see this compression and you see that expansion, it just means that something has changed. Something is different. We're breaking out of a zone. And think about the same thing in life, like you real change happens when you really kind of get outside of your comfort zone. And this is what the chart's telling you. It's outside of its
That's a great analogy, Jason.
yeah. It's outside of its comfort zone. It's ready to start moving higher. It's starting to head up. Like this is just the beginning of a trend. And this is why like Sam and I point to these band squeeze breakouts so much. Like we talked about the one in Platinum recently.
Gosh, yeah.
Sam said
I tweeted that out this week and tagged Louis Spector, the director of curriculum at the CMT Association. I told him this platinum Bollinger Band breakout needs to be in a future CMT textbook because that's as good as it gets.
it is, and it really is, and it's just the band squeeze breakouts are one of the most. If you even are a day trader, you can use the first 30-minute range and see if it breaks out of that 30-minute range. If it has low volatility and does it, that's a trade. You can use it as a high win rate for a day trade. If you look at long-term trend followers, if you're looking at big Bollinger Band squeeze breakouts like the one Sam pointed to in Platinum, those are high win rate trades. Like these are very important times. So looking at this chart, like I think this is a good time where we're going to start to see the commodities start to outperform. Silver's already outperforming, Sam, and that's something that's very significant. We're seeing silver, what was it, up 36% when I looked yesterday?
It's
And
on
gold
its
was
way
up
to 50, Jason. I don't think it's anywhere close to done.
Yeah. I think gold, or I think silver is probably headed to 50 pretty quickly. I can't see any reason why that wouldn't happen, and I think it's just beginning. Like this is just the beginning of the outperformance. The outperformance is just starting to happen. If we can see that continue, that's really going to tell us something about this market. Which what it tells me is that we're moving into the next stage, where we're going to see copper leading the way, and possibly oil start to lead the way sometime soon. I'm pretty bullish on oil. Wavy did ask what were we most bullish on in the commodities market at the moment.
What's your answer, Jason?
Copper miners look really amazing. BVN's one I keep looking to because man, that's a massive base, and I love massive bases. But what's next to me is going to be important. That doesn't mean like everybody loves to buy low. They go, oh man, oil, I'm going to buy it now because, the cycle and blah, blah, blah. I'd rather buy it higher. And that's what I'm going to say. Like, good traders, it's not that you do so many things that are so different from everybody else. It's just you're willing to wait. You're willing to wait for it to prove itself. Look at this chart, for example. Like, I wouldn't buy it while it's sitting there and go, oh man, well, I know commodities are going to move next. It's at 109. I'm going to buy this thing. And then you would chop around for basically 2 years and probably drive yourself crazy and probably be out of the trade before it even moves. But right now, you could look at this and go, okay, this is an interesting point to start getting long this thing. And so some of the commodities like copper and so on are starting to move. When oil looks similar, I would want to buy oil as well. That's the thing that I'm waiting for. When oil has a breakout, gets above 80, really closes above 80, not another fake out, not another hit 80 and then bounce right back down. When we really get a close above 80, I think it's a good time to buy it. Not to mention, I think energy at that point will be above 100. That's when I'd want to buy that on a weekly close above 100 as well.
Totally. And just to answer your question about my favorite commodity, I think hands down, my favorite commodity right now is palladium. This bearish to bullish reversal pattern in the palladium futures is as clean as it gets. You've seen extreme confirmation from the mining stocks. We've been pounding the table on the platinum and palladium mining stocks at the gold rush, making a ton of money in them. And I don't think that's going to change anytime soon. I think it's actually about to accelerate. I'm going to be looking for the commercial hedgers to flip back to a net short position in this Friday's COT report. And for those of you who aren't familiar, we've been talking about it a lot at the gold rush. But if you haven't been paying attention, the commercial hedgers in Palladium have been carrying their largest position of all time from the long side. And historically, whenever they're net long or close to neutral on the COT profile, that is the beginning of huge moves in Palladium futures. So I think there's a ton of evidence suggesting that Palladium is just now getting started. Despite the recent run we've seen, I think the philosophy of big moves start with big moves applies to this one.
Yes.
And
I
Jason,
also agree with you, though. The one thing I do want to add to that is that, I am long Palladium. I think Palladium is a great one. I know a lot of people are going to go like, oh, what do you really do with that? There's some stocks. There's not many. If you're with the Gold Rush, you know the names. I'm not going to give out the clients' names. I know you guys work hard for those things. And so, like, we're going to keep those to ourselves, but we're making a lot of money. We're hitting doubles in stocks, guys. Like we're hitting doubles in stocks. This is what we do at the Gold Rush because there are so many opportunities in some of these miners that you will see these things hit 100, 200%. I mean, like if you go back to the last cycle, 2000, 2008, you'll see 3,000%, 10,000%, and so on in some of these. We're riding those waves right now, have some big winners. We'll continue with those.
totally. And I think a good way to wrap this show up, Jason, is with the dry bulk shipping ETF. This is B dry. And, historically in these commodity cycles, you've seen huge moves from shipping rates. And let's see, let me pull up my chart here and I'll tell you what it did in the 2020 boom, because it was a huge move. I know it was a very large number. I don't know off the top of my head how much it moved though. So let's see. So it bottomed back in May of 2020 and then it peaked in October 2021 and rallied 1,000%. This B dry ETF, and boy, Jason, does this setup look amazing. The Kardashian bottom is one of my favorite reversal patterns. It's kind of like a cup and handle. I think that same philosophy applies. You can use a little measured move from the bottom of here, tack it on to the top of this range and get a little target if you're interested in trading this tactically. But I'm more interested in the information that the B dry provides of commodity strength. You know, shipping rates don't go up if there's not demand out there for commodities. So this is really an amazing way to visualize the demand for commodities around the world.
Yeah, and some of these shipping stocks are really starting to pick up now too. Something for you guys to look at. I'm sure we'll cover that more
And
as
those stocks can also really move. Yeah,
yes, we'll cover that
good
more as
call
they
out.
those that get going. But starting here, like this is something that Sam outlined this a while ago, and we were waiting for this to possibly get above 7. We didn't really get a good close, and then now we're finally getting a good close. I like to trade the shipping rate futures. The ETF's also in my long-term portfolio, so I do think this is a liquid product. It is tradable. So, if you guys want something in your portfolio to diversify your portfolio a little bit more, this is something great. The Kardashian bottom. And what's funny is, back in the day, and this is just kind of it's kind of TMI, but at the same time, it's pretty funny. Back in the day, if you talk to technical analysis and this pattern came up, they'd talk about like D cups or something, and like now it's like bottom. So I'm part black, so I'm more of an ass guy than anything else. So once again, I like the bottom patterns better, but to each their own. But yeah, this is a good one. This is something that is bottoming out, could start to move higher. I think that trend will probably continue. And I think you're going to start seeing it show up in stocks like Sting and Nat and so on. And we'll outline those a little bit more at some point. But man, there's some really good trades out there. Sam, can we go to the silver to gold chart real fast?
Yeah, absolutely. Yeah, here it is.
Okay, so only thing I want to point to here is that people keep going, oh man, silver's not going to really keep going. This is probably the end. I want to point to the fact that this has happened over and over again, where gold massively outperforms silver at the beginning of cycles. This happened even more so driven by central banks buying gold this time. They weren't buying gold this heavily back in 2000, back in '08, or any of these periods. Now we're seeing that kind of come into play. So we saw silver price that was really depressed. But as I say, and as Sam says all the time, which is the cycle is going to play out this a certain way. And what that means is you see people run to the safest assets first. If it's in stocks, you're going to see, I mean, nowadays it's like the Mag 7. You're going to see those usually bottom out and move first after like a market crash or something. And the same if you're looking at the precious metals complex, you're going to see gold move first. That's the safest asset. And then as it broadens out, as people go, man, gold's up a lot. I think I missed that. Better buy silver, and then they're going to buy the miners, and then they're going to start going into platinum and palladium. We've seen that all happen already. Silver is above a major resistance zone. It doesn't have much resistance above it. I think silver is going to 50, probably 100. Sam mentioned a good one the other day, looking at commodities, silver to 100. Sam talking about copper, 10, 10 and 10, 10% yields possibly, and $10 copper. Oil's probably going to hit 200. Like this all can happen. It sounds crazy today because we're sitting here and going, oh man, that's crazy. Oil's at, whatever it's at today. Silver's not even above 40. What are you guys talking about? Copper's at 5, but I do think this can move up pretty quickly and be pretty violent. And so I think people should at least have that on their radar. It's not that I'm saying this is exactly how it's going to go. I am saying like have that on your radar because if it does happen, you don't want to be caught off guard by it.
Totally. And yeah, this is such a great chart showing just the how cheap silver is in relative terms. And you can look at a lot of commodities. Something like copper to gold looks very similar to this. It's almost never been this cheap in relative terms. You can also look at, we take an equally weighted basket of base and industrial metals relative to precious metals. And, precious metals have been completely dominating for several years now. So I think there's going to be a significant rotation into the base and industrial metals. I think we're already getting early indications of that beginning. Copper having its best day ever as it blasted off to new all-time highs. I think it doesn't really get much better than that, but there's a lot more evidence out there that suggests it's almost time for these base and industrial metals to take over.
I think that's the next phase. I think that's the next phase of this, and silver. And this, people always ask whenever I post that chart of gold, copper, and oil, where does silver fit in? Well, silver is a bit of an industrial metal. It is a bit of a monetary metal, and so it is right kind of where copper is. You'll see it usually move before copper. Yes, copper is making a new all-time high, but I take this looking at 52-week highs. Silver has hit a 52-week high a long time ago. Copper hit a 52-week high last year. So I think that this is going to continue. I think the cycle's working the way it should. I think what we just want to see next is see silver get a new monthly close over those old highs. And I would be very bullish on silver hitting 50, 100. I don't even know where it would end up, honestly.
Higher, I guess. We don't
Higher is
really
a
know.
goal.
Nobody has a crystal ball, but
Yeah.
we have our ideas, and I think the bottom line is we think they're going higher.
Yeah.
Um, so
Trend is
just
up. At the
right.
end of the day, for me as a trader, it's always the same thing. And I know it probably sounds boring because I say the same thing over and over again. I'm going to buy it when it breaks out. I'm going to use the trailing stop. I'm going to pretend I have no idea where this thing's going to go. And, I'll give you guys a good illustration of this. Back in 2023, I get long semiconductors pretty heavily. Just on a signal, basically get a signal. At the time, we were kind of headed into a recession. If you were looking outside in the United States, you were like, man, like
It
I'm gonna
was
buy stocks.
consensus, Jason.
Yes,
Everybody thought we were going into recession.
yes. I mean, and not to mention it was kind of depressing outside. The market just kind of kicked everybody the last year. And then you're sitting there in January 2023 and you're getting a signal to buy semiconductors. Nvidia's breaking out and so on. So you buy these semiconductors. I had so many friends hitting me up and going like, that's a terrible trade. It's a bad idea. This is going to get chopped in half. This is going to be down by 50%. And I get that all the time. And I remember saying like to my buddy, like, if God came to me and he said, I know where this is gonna go. I know this is gonna go down by 50%, Jason, you got to get out. I would say I have a signal, it's in an uptrend, I'm long. And sorry, God, I'm gonna stay in the position. And like, that's just the conviction you kind of have to have when you really like something that's in an uptrend. And also understanding that like that doesn't mean I know the future. That doesn't mean I knew that Nvidia was going to go as high as it did. It just means I'm comfortable with my signals. I understand the type of trader I am, and I'm going to let it ride. And it's the same thing with silver. I'm going to let it ride, see where it ends up. I'm not going to second guess it. And I think it's headed a lot higher. And I think 50 is a chip shot from here. And I think we're going to hit it by the end of the year.
I love it. Yeah. I just want to give a shout out to Mr. Zerby in the chat, calling the Kardashian bottom a J-Lo booty. Maybe I'll start marking my charts up with that. That's funny, Mr. Zerby. They said that the Wavy said, tell them inflation is here to stay. The next leg of the commodity super cycle is incoming. Yeah, Wavy. That's exactly what I'm telling them.
Yep.
And it
That's
looks
what we
like
tell them all the time. We're right about it almost too much. I probably sound like a crazy person some days. Like, commodities are going higher. Yields are going higher. I probably sound like I'm like a schizophrenic talking to the wall half the time. But like, really, it's like something you're going to have to just think of over and over again. And why I bring it up so much is that it's something that shouldn't be off of your mind at all. It should be, look at palladium and platinum. Palladium is probably the next catch-up trade, moving up to where platinum is, making a big move. Silver is making a big move. The miners are just continuing to defy all odds and continue a lot higher. I mean, they have to be the best performing sector in the United States this year by far, probably by like 40 or 50%, which is wild. But once again, it's a continue to be open to that fact that we are in a commodity super cycle. And yes, oil is what everybody's going to point to. You see, oil's not up yet. And then when that rips, they'll probably say something else. So I wouldn't listen to those people. They're crazy people. Continue to look at the charts, each trade, take them one at a time, and I think it's going to continue.
totally. And we have a few people in the chat here mentioning uranium. which has
I like
also
it.
been really awesome. Something like URA or NLR. There's several uranium ETFs out there, but yeah, these stocks are red hot, and we've caught some huge winners at the gold rush in that space. So yeah, we're continuing to monitor them for big breakouts, and there's several on my radar. Maybe I'll outline one of them tomorrow. I'm not sure if it has broken out yet, but
Yeah,
keeping a
that's
very
another
close eye.
one. I hate to even I don't want to leave. I'm not switching my answer because Palladium is honestly the one I think will move a lot. But uranium miners, man, they look really good.
They're amazing. I mean, look at the base in the leader of the group, Camco CCJ. You know, the bigger the base, the higher in space. I think that's all you need to know about that one. That's a huge base in the CCJ, and I think it's really the playbook for energy at large. I Let's pull up the chart here on CCJ. What year was it that it peaked? I think it was
Uh,
2007.
well, yeah, it peaked in 2007.
Yeah,
The
it was
Fukushima
2007. And
bubble or
so like
something.
you can look at something like the XLE, which is the only sector spider that's still below that great financial crisis peak. And do you really want to bet that energy isn't going to catch up to all of the other S&P 500 sectors and break out? I think it is, and I think Camco has a very similar base and it's leading the way higher for energy.
People always mention that, you look at oil and they go, well, it's the same thing we got with silver. Things have changed. Oil is dirty and we've moved on from it. It's like we still use it very heavily. It's same with coal. Like people want to go, we don't use coal anymore. Yes, we do. We absolutely use a lot of coal still. So just understand, like, the cycle is going to play out probably the same way most of the cycles play out. And we're going to see uranium is already leading the way. CCJ, especially, at least the leader is up there making new highs all the time. And then we'll probably see XLE, some of these energy stocks, the big names that haven't moved in a long time, making new highs. I mean, and not to mention just something to end on. We did see a lot of people talk about energy, but they don't realize that during the Biden administration, that was the best performing sector for his 4-year term, which was XLE energy out of the sector spiders. So these things move, and when they move, they really move. So if this starts to break out, like, you want to participate, yes, you could get another false breakout. Yes, it could be very frustrating, but I will tell you one thing: every good trade always starts with a false breakout. Don't know why. Wish it was different. wish it was some other way. But think about it this way: Paul Tudor Jones said this in Market Wizards. Jack Schwager talks about, Paul Tudor Jones catching the top of the market, and Paul Tudor Jones says, yeah, it sounds really cool when they write about it because they say Paul Tudor Jones catches the top of the market, shorts it perfectly, because they don't want to say Paul Tudor Jones on his 5th attempt shorts the top of the market. That's how good trades work. You might take some time, it might be frustrating, but when it happens, it's really going to take off. And probably the next one is probably going to be the one because everybody hates XLE at this moment. It's been beat up. Nobody wants to trade it. Nobody wants to buy it. I bet the next one's probably it.
Seriously, yeah. That the sentiment too is an important aspect of it, you know, like even myself, like I haven't really been bullish on energy and I catch myself with those thoughts and yeah, it just makes me think twice about my thesis there in energy. You know, I've people have been thinking that energy was ready to break out, but I haven't been ready to say that. Like I've been needing to see the copper and base and industrial metals really decisively start to break out before this commodity super cycle rotated into energy. And now that that is happening, yeah, I'm very much open to the idea of energy breaking out. I think it can happen anytime within the next 6 to 12 months. And yeah, that is all we have today. I really appreciate all of you being here. A shout out to Wavy, Mr. Zerby. We've got NP Mel in the chat. We've got Dominic. All of you, thank you for being here. If you liked what we had to say today, you can click the link in the YouTube description to check out what we're doing at the Gold Rush. But just in a nutshell, we're publishing trade ideas, and it's not just stocks, but we also cover the futures for pretty much every commodity that you can trade. We're covering currencies, we're covering bonds, and we're talking about it all the time here. It's only $12.99 for an annual plan with a 30-day money-back guarantee if you decide you don't want to be with us for any reason at all. But yeah, we're having a lot of fun with it. And as you can tell, Jason and I are very excited about the commodity space right now. And I think there's a ton of money to be made. You know, a lot of people are focused on the whole speculative tech trade, and that's all fine and well, but don't forget about commodities. Commodities can be huge winners, and you know sometimes they're even better than technology. And especially if you're trading futures like Jason's fund, and you know you and I were talking about this earlier this week, and
Yeah.
how you can make like bonds sexier than trading fart coins.
Yeah.
And it's
It's
just
the amount of leverage you get to have, using some of these products. And so it's the reason why I always tell people, like, learn the future space. Like, we cover a lot of stocks because I know you guys want to learn that, but also understanding if you are in the future space, it gives you the type of leverage you kind of get from options, but at the same time, you don't have that time decay aspect of it. So you can really get into some of these products and get some major moves. And also, you can pick your leverage. You don't want to use crazy leverage. Great. I don't think people really should. You can use a little bit of leverage or however you want to do it, but there's lots of moves there. So, we'll be talking about that a little bit more soon.
totally, Jason. I love that. And let's leave this show here for today. But I just want to thank everyone again for showing up and making this a fun show for all of us. We really appreciate all of you for being here. And we will catch you again next week at the same time, same place.
Next week,
Back.
I real fast. Next week, I'm 90% sure Michelle Snyder is coming out with me, one of the first female floor traders. Learned a lot from her over the years, especially about commodities. She's traded them on the floor, and basically since the 70s, she's been trading commodities. So excited to have her come on. That'll be a fun one of my really good friends. So we'll see you guys
Totally.
next week.
It's
with
not
that.
something you guys want to miss. So make sure you mark down your calendar next Thursday at 2 p.m. Eastern Time. Be there or be square. We'll talk to you all later.
Later, guys.
Adios.